Hi, and welcome back to Bridging the Gap. We're back from taking some extended time off, but we're excited for the upcoming installments of the show. I'm Jared Jones, Director of Investments and Lead Advisor here at Omega. And joining me, as always, is Lisa Kirschenbauer, the founder and president of Omega Wealth Management here in Arlington, Virginia. How are you doing today, Lisa?
Doing great, Jared. Yeah, happy to be back here.
Yeah, absolutely. So, as the title of the show, Bridging the Gap, indicates, we're going to try and bring you our different perspectives around money, markets, and life, whether it's through the lens of our different genders, different generations, or perhaps different political orientations on topics. We hope to inform, educate, and entertain you. Today, we're going to begin with a couple of different topics, primarily on the financial side of things. So, just a moment ago, President Biden signed into effect the $1.9 trillion stimulus package. So we're going to talk about all the different things that come with that. And then we're going to talk also about a little bit of an asset class rotation going on, which is a fancy way of saying, what performed well in the stock market, the types of stocks that performed well previously are starting to change. We're going to dive a little into that as well. We'll be trying to provide these as weekly updates moving forward, and hoping to give you some ideas and content to ponder about and connect with us on. So like us on Facebook, LinkedIn, like our YouTube channel, subscribe. That's the best way to stay updated with the newest versions of these shows. And so let's go ahead and jump into the show. So as most people are probably aware, the Senate, House, and President have all been working towards getting the newest stimulus package passed. A couple of the biggest provisions that are included in it are $1,400 checks per adult and child. Unemployment is going to be kept at its elevated level of initial $300 through September 6th. There's also $350 billion for city, states, and Native American tribes. Something new that hasn't been in the previous ones is there's going to be a child care credit of $3,000 per year per kid ages 6 to 17, and $3,600 for kids 0 to 6. There's about $170 billion going to schools and another $100 billion going to public health. So that is certainly a lot of money. And to put it in a little bit of context, it's about $1 trillion more than what we got with TARP in 2008 and 2009. So this is the third of 3 stimulus packages. There's a lot to unpack with that, a lot of opinions. So I'm curious, Lisa, what are your thoughts on all of this?
Yeah, thanks, Jared. I think first thing that I thought about this morning was, so when you were referencing TARP and the financial crisis, that was 12 years ago. Seems to me there should be some inflation here, right? Like 12 years later, what it takes to support our economy and citizens might be higher. So I know we keep comparing, and yet it was 12 years ago. That's the first thing that's crossed my mind. You and I have talked a lot about deficit issues. I know that we have a number of clients who are concerned about interest rates and deficits. I'm going to leave the interest rate conversation to you. One point that I want to continue to make, and I know not everybody agrees with, and certainly a lot of people are concerned about deficits. Let's just remember that the federal government is a currency issuer. So they can carry this better than the states and local governments, which are not currency issuers and have to, in many cases, by law, balance their budget every year. So with all of the revenue they've lost from sales taxes and various revenue, income taxes, et cetera, they've had to cut a lot of their services. So the importance of the state and local government piece, I think, is important. And also to make sure that we're not conflating the federal government's budget or lack thereof, and state and local municipalities, governments, and why that piece is so important. Now, I know we've had a lot of questions from certainly our clients that are concerned that a rising deficit has an impact on interest rates as well, and that those two things come together, but do they really?
Yeah, so I think the other important thing to note when we're looking at this stimulus package, it's fiscal, it's not this is just the fiscal side of it, not monetary side. So that's a different conversation. But right now, unemployment sits at 6.2%. And to provide some context around that, I think that's about as bad as unemployment got back in 2008, 2009.
Yep.
And those are the official numbers. So there are economists that try and tweak things to look deeper. There are also people that are completely out of the job market. And we've started talking about that, Lisa, you and I. So
Yep.
right now, if we adjust for people that have left the labor force, they estimate that the unemployment number is closer to 9.4%. And the reason I'm talking about that is because inflation historically has stemmed from when job markets are overheated, companies need to start paying their employees more to attract them to work for competitive workforces. So that hasn't happened. We're still at 9.4%. That's a massive chunk of unemployed people out there. There's a lot of jobs that are going to be coming back online. We'll see, I guess, for sure in the spring and summer. We'll see if that comes to fruition. But until I think we get to a point where we're at full employment and employers are competing for employees, we're not going to see any systematic inflation. We might see fits and starts of inflation, and I'm sure that will happen. We're already kind of seeing that somewhat. And the market, of course, is going to freak out when that happens, if and when it does happen, I should say. Because who really knows, right? I think inflation has been the boogeyman of the markets that hasn't really happened. We talked about back in 2008, 2009, people expected to get inflation from the stimulus that came out of that, and it never happened.
Right. And, to be fair, I think the Fed, so back to the monetary side versus the fiscal side, the Fed has made it crystal clear that they're willing to tolerate exceeding that 2% mandate on inflation that had been set a number of years ago in order to put full employment as a priority. And, I think the thinking there is when we have full employment, then all kinds of people benefit across the board in our country. And so, I think they've tried to be as clear as possible. And we're starting to see numbers. There's projections of inflation running, especially as things open up, over 2% later this year. And I think the Fed's tried to do whatever they can here to say, that's okay. We think it's temporary. We think it will correct itself. We're not worried that we're going to have to raise rates anytime soon. And yet I know people worry about it. I think we've gotten to a point, Jared, where I think there's always going to be people worrying that the market is overvalued and the next great recession is around the corner, right? I mean, I think, and maybe there comes a point where you need to let go of that and build a portfolio that can weather whatever the financial situation is.
Yeah, absolutely. I think as we look, this kind of dives into the next topic about where the shifts are going in the stock market. But historically, at least, the best counterpart to inflation has been stocks, primarily value stocks, I think. So that is what we've seen in the markets lately, at least since probably around I can't remember when exactly happened, but at some point in the fall, we noticed a shift.
November, December, we saw the shift, I think, happen.
Yeah, so Q4, Q3, end of Q3, Q4, somewhere around that time frame. And we saw a shift from value beginning to outperform growth, which had been the opposite for so long, over like the last 10 years or so, right? And now in Q1, value is outpacing growth. Growth is just barely breaking even, at least at the beginning of this week.
Yeah.
Where value's up, not a lot, but it's a low to mid single digits, I think, at this point. But we'll see how that goes. And also, growth is, it's more risky, right? In an inflationary environment.
Normally.
Yeah, in an inflationary environment, you want to take some risk perhaps off the table and invest in value companies. So at least that's what we're seeing there.
Yeah, and so just to break it down a little bit further, a couple things. One is, value versus growth. The easiest way for most people to think about it is value style stocks are the ones that tend to pay dividends. You'll see like utilities, sometimes banks, but they're the dividend paying stocks and they are undervalued, hence the term value. And to your point, it's been a long time since we've seen that. The growth style tends to be the growth style companies, the technology companies. The other piece, the two other asset classes I want to just break out even further is we're seeing small company stocks. So small company value stocks are ridiculously outperforming everything else. And often when you see small company stocks performing well, it's the market believes we're seeing recovery, or we're going to see recovery. That's where you normally see that trend. The other sort of unusual place is emerging markets. So for all those folks who thought, oh, we got to get out of emerging markets, international, all of that, this was a great example of, hey, you need to stay well diversified, because you never know when these asset class shifts are going to come. So I think we need to stay diversified. I think it's going to be interesting to see what the returns at the end of the quarter are. It's all going to depend on how well diversified you are.
Yeah, exactly. And just to hammer home the point about value versus growth, another good way to think about it is value stocks are usually companies with really good balance sheets, right? They have solid financials, where growth stocks are companies that tend to be reinvesting some of their profits and don't show a lot of profit at the end of the day, because they're trying to grow for the long term. So that's another way I like to think about it, at least. And yeah, emerging markets, that's going to be an interesting place to keep an eye on. I think inflation might actually help emerging markets with the weakening dollar. That tends to help that asset class perform well.
Yep.
So I think you want to maybe round out some discussion with some lessons you might have learned out on the ski slopes, right?
Yeah, not everybody knows, but I've been spending, for the first time ever, the winter out here in Park City, Utah. Yes, we still have snow. I was actually out skiing today after we got some more snow. I know a lot of people don't like snow, but it's been a really interesting experience. I mean, obviously, COVID has changed what's possible for a lot of people. There have been a lot of people moving around. There's a lot more flexibility. I think, certainly we've learned to be more flexible and agile and open to new opportunities. One of the things that I've really enjoyed, and we've talked about this and know of it from our training, is this idea of being in flow. And the idea that, you're doing something you enjoy and that you're really in the present moment. And it's been great to have that opportunity. And you also know when you're not in it. So once you experience it, it's pretty clear when you're not in it. And, I for so many of us, I think it's hard because we've got so much coming at us. I've really appreciated to have that space of time while still working full time from here and learning to adjust. So it's been a great, I think, experience. No doubt, real estate market is really hot in a lot of vacation places. So probably not a great time to buy that.
It's hot everywhere. That
right.
might be a conversation for another
Arlington as well, right? And so, this is a good time to maybe experiment, try different things, not necessarily commit to, buying that new place. Rates are low, but prices are high, which makes it, I think, a little harder, doesn't it, Jared?
Yeah. Yeah, I'm pretty much effectively priced out of anything right now as a potential first-time home buyer, so I'm sure we'll talk about real estate on another show for sure.
Absolutely. Lots to talk about there and unpack as we move forward.
Yeah. And I just want to say, on the flow state side, I think that's an important topic, especially as we're kind of, hopefully nearing the end of this Groundhog Day experience. The flow state, from research, happens around when you're doing a skill that you're comfortable with, but you're pushing yourself a little bit further than your boundaries previously were, right?
Oh yeah, and definitely have been pushing myself on the ski. This is the most I've ever skied in my entire life. Luckily, haven't really gotten hurt too bad. I had one little mishap, but overall, it's been great, and it has been it's challenged me physically, which I think it's always good for us to have those challenges. It's great for our brain, and I think when we think about happiness, having that challenge and that growth is a really important piece that many of us haven't been able to explore as much or in all of the ways we would like, but hopefully some of that's changing and coming around.
Yeah, absolutely. Well, hey, it was great hearing from you all the way out in Utah. I know we're talking behind the scenes all the time, but it's fun to connect again on these shows and talk about some of these important topics. So awesome.
Well, thanks, Jared. And, want to remind all of our viewers, We've got a lot of content we're putting out on the investment side of things. So check out our website. Be sure to look at the blog there. We've got some upcoming webinars. If you're interested and you're not on our mailing list, let us know. And we're going to keep talking about investments on here. We think there's a lot of clients and people who are very curious about investment topics right now. So we want to keep you as informed as possible.
Yep. So thanks for tuning in. If you watched this far, we know that you have enjoyed the video. So go ahead and like it if you don't mind. And we'll see you again next time.
Take care.